Hello, I'm here with Quebecor CFO Hugues Simard, and we are here to talk some debt. Um, Thank you for making the time to talk to us, Hugh. And since this is a fixed income event, I'll start right off with debt. I see that you have $0.2 billion in debt outstanding, and the weighted average fixed coupon is 5.4%, and the average maturity is December 2024. Are you comfortable with that? Where do you see that going over the next couple of years?
Yes. That absolutely. A little over 5 billion, 5.2 billion net of the only comment I'd make is as we hedge our U.S. debt, because part of our debt is denominated in U.S. dollars, which we hedge 100% of. There's an asset on our balance sheet for roughly $1 billion. So the net debt is exactly what you said, 5.2 billion. And a little over 5% average coupon, and towards the end of 2024, early 2025 average maturity. And we've historically managed our debt very conservatively with a mix of floating and fixed, a mix of U.S. denominated, Canadian denominated debt. It has been coming down over time. We have been delevering for many years, and we're actually quite proud of the discipline that we've exercised over the past years, ever since our 2000 event of the purchase of Videotron and TVA, which we did in partnership, as you know, with the Caisse de dépôt et placement here in Quebec. And over and above our various investments, most notably in wireless. We launched wireless services in 2010 and invested more than $2.5 billion in a network and in a spectrum, of course. And we've also taken out our partner, the Caisse de dépôt, over 3 transactions since starting in 2012, with the last one in 2018. And over and above all of this, we've managed to delever to about 2.7 times EBITDA. So we're very proud of that. And when we look at our cash flow forecast and uses of cash going forward, we are indeed looking at some further delevering over the next months and years.
And do you have any goals there in terms of net EBITDA to that?
Well, the way we look at it, we're comfortable with the zone we're in. I'll call it that. Between 2.5 and 3 times EBITDA we're comfortable. I think it is a very favorable leverage. It's actually favorable to most, if not all, of our competitors and peers here in Canada. Even though they are larger, they are a little bit more levered than we are. And it also allows us, while at the same time allowing us some flexibility. So we're very comfortable in that to have reached and to be maintaining and even lowering that 2.5 to 3 times range. Yes.
Okay, and while you are deleveraging, you told us around a year ago that you don't really have a credit rating upgrade among your goals while doing so. Is that still the case, or have you changed that?
Well, flexibility is important to us. But that being said, we are, as I've just said, we are delevering, and we are applying, we have sizable and growing cash flows. And when we look at the big uses of that cash going forward, whether it's CapEx or it's spectrum auctions, dividends, stock buybacks, we see further potential for delevering. So even though it's not an objective in and of itself, I mean, at the end of the day, let me answer it this way. I mean, at the end of the day, what we want is to lower as much as possible our cost of debt. So it's as simple as that. And delevering and ultimately an investment grade rating, of course, allows us to do that. But at the end of the day, if there are other ways for us to tap the markets at a reasonable cost of debt, then that certainly is something that we'll be looking at as well.
Okay. And as you talked about tapping the markets, I'm thinking that, equity investors have been way more vocal about ESG demands in the past. And I wonder if your fixed income investors are starting to make the same kind of demands. And if they're not, are you considering going green anyway, or?
Yes, the investors, both equity and debt, have been increasingly bringing up environmental concerns. And but I'll be honest with you, we didn't wait for that. Some time ago, we've launched a very important plan here within Quebecor. We take our leadership in everything that's environmentally friendly very, very seriously. Um, just to throw a couple of data points at you, 82% of all the energy we consume here within the Quebecor group comes from renewable sources. And about half of all of our emissions, our greenhouse gas emissions, come from our fleet of vehicles. So quite some time ago, we've put in a plan and have started on it with a clear objective of bringing our entire fleet of vehicles, which is over 1,100 vehicles, service trucks and quality control and all of that. We have over 1,000 vehicles, and we have committed to bringing all of them to electrify our entire fleet by 2030. We have started and will continue, and it is very important for us to reach that goal, and we're well underway. I mean, other things I can speak to: responsible procurement, of course, how we manage how we optimize our energy in all of our various buildings and premises. And also waste management. Over the past few years, we've recycled nearly 9 million electronic devices, mostly phones, of course, but other electric and electronic devices, which we've refurbished and reused. So we're very proud of that and are continuing on that. And it is, the whole ESG field is something that we take very seriously. We believe we have a bit of a leadership role to play here as one of the major corporations in Quebec, and are proud to be doing our part and to be leading in that field.
And with all these adjustments you've made, do you think that perhaps the next bond you raise could be sustainable?
Mm-hmm. Well, it's certainly something that we're looking at, and it is a very clear objective of ours. And not knowing really when the next issue will be, it's a little bit difficult for me to commit to it. But it certainly is something that we have in our as an objective in the near future, for sure.
Okay, got it. Here's a question we just got from the audience. What are your plans with regards to building the 5G infrastructure in Canada?
5G, we have started quite a few initiatives on the 5G front. We are working. We announced that last year. So as you know, we are working with Samsung, who's our partner on that front, and we have been working very, very closely with them ever since we've made that deal with them. We have started to invest in infrastructure, and will continue. We will, and of course, we need more spectrum. And the auction for the public auction for the 3,500 spectrum, which was delayed. It was supposed to happen this year, but for obvious reasons, it was delayed until next year, and should happen in June, we believe. So we will be bidding for that in our regions, and that will give us the necessary spectrum, along with the 600, which we purchased at the last auction last year. Will give us the necessary spectrum for 5G, and we will be continuing over the next few years in a very staggered and very disciplined approach to invest the necessary capital to make sure that we are, as the revenue models and the business cases, both B2C and B2B with respect to 5G come a little bit more formalized, that we are ready to go, and we are ready to be in the offering 5G services and 5G equipment for sure.
And how would you finance the 5G expansion? Would that be through cash flow, a mix of cash flow and new debt?
It's the way we see our 5G investments, they are in continuation. Don't forget that networks and our investments in networks and spectrum is an ongoing need. There was the 4G, the 3G, the 4G. Now we're into LTE Advanced. Call it the 4.5 or 4.75 G. So we continue to invest and to fund all of these investments through. Partly, we've done some debt in the past. Right now, we have availabilities for sure to cover the investments that we'll make for 5G, which, as I said, will be staggered over the next few years. So we don't foresee any specific spike that would be of concern. As we have more than 1.8 billion of availabilities at this point. So that more than covers our spectrum and investment requirements for quite some time.
Okay, that makes sense. I'm interested in getting your thoughts on the Rogers-Cogeco deal, or non-deal at this point. And also, would you consider making an offer for Cogeco? Why or why not?
Let me answer you in this way. Cogeco is obviously a company we know very well, even though we don't compete with them. We share the Quebec footprint with them. Both Videotron and Cogeco are historical cable companies that have grown side by side and are controlled by two families who know each other quite well. So there are people that we work with from time to time and know them well. It's my comment would be, I think the most interesting thing you said is the non-deal. I think we certainly understand, and I think the Audet family has made it very clear a number of times, I think, over the past few days, that they are not willing to entertain this deal. And I think we have to respect that position. They're focusing on managing and developing their company, investing in the future, in new services and platforms. And I think, we know them well enough to respect, I think, that wish. And I think, whether at some point we end up working together is something that we'd be happy, but it's not something I'd comment on at this point.
Okay, I respect that. And what other areas are you looking at for M&A? What would make sense for you?
A few things. First of all, a little bit in the continuation of what we've done over the past few years. We've made a number of tuck-in acquisitions, most notably on the content side. Our ecosystem here in French Canada or in Quebec works very well, and it is important for us to continue to invest in the production of local, differentiated, and unique content. And so we've made, as I'm sure you know, over the past few years, some acquisitions, content production capabilities, and we'll continue to do so. Because, as I said, that really feeds very well our ecosystem between our media properties and our telecom properties, and allows us to offer differentiated and, as I said, unique content in French to our audience here in Quebec. So we continue to be on the lookout for interesting opportunities on that front. Same with cable companies. Smaller cable companies might be of interest to us. We continue, as I said, to be on the lookout for that. Globally speaking, on the M&A front, for the past few years, we've been more opportunistic, and we intend to continue to do so. As an opportunity comes up, we're interested in looking at it. Other than that, I think I think the point is that we are really focusing on on operations and delivering. I mean, we still have quite a bit of runway here in Quebec in developing our wireless services and optimizing our wireline services, and have been hard at work on that, and continuing to invest. And M&A will comes along, as I said, and if the right opportunity comes along, then we jump. Otherwise, we'll continue to focus on delivering the best services and the best service to our customer, to our clients and our customers.
And would it make sense for you to grow outside of Quebec too?
Well, the first thing I should point out, as I just said, is we still have quite a bit of runway in Quebec. I mean, our market, for example, in the wireless, things have been going very, very well. As I said earlier, we launched our first wireless services in 2010. It's only been 10 years, and we grew to close to 20% market share. We launched a second brand, Fizz, in 2018. And so this has been a great success for us, but we still feel that we have quite a bit of work to do, and we still have quite a few clients that we still don't have. So we're focusing really on developing the business, and even on the wireline side and on the broadband side, delivering our new platforms, whether it's our IPTV platform Helix, and others, to compete more effectively every year with on both sides of the equation, both the wireless and the wireline. If in the right circumstances. That being said, as I said, we launched Fizz. Fizz gives us an interesting platform, and the right expertise, the right platform, and it puts us in a position where we could look at an expansion outside of Quebec. Now, whether the right conditions and the right circumstances come together is something to be seen. So my answer would be that we're still focusing on our home market, where we still have some market share to gain. Should there be the right conditions and the right circumstances for us to, in partnership with others or on our own, to launch our services effectively outside of Quebec, that may be something we'll look at. I mean, we decided quite some time ago not to build our own network outside of Quebec for obvious economic reasons. It just wouldn't make sense for us. But that being said, whether through, as I said, partnerships or other arrangements, if the right circumstances come about, we'll certainly, again, we tend to be opportunistic. So if the right opportunity comes around, we'll certainly look at it.
That makes sense. Could you talk a bit about trends in cable television? I mean, it's no secret that a lot of cable companies have been losing subscribers, which I imagine could be a challenge for Videotron. So I wanted to understand if you see that as a challenge and what the plan is there.
You're referring to cable, right? To TV distribution, right? Yeah, the cord cutting. Of course, cord cutting is a global phenomenon. We are a little bit more protected because of the language in Quebec. But that being said, we have a number of plans in place, one of which is Helix, which I spoke about, which is a very high performance IPTV platform, which we launched last year, about a year ago at this time, which is a defensive move. Obviously, we don't, it is a market that is declining, but we believe that through very unique and very superior functionalities, we are able to, that core group of people, not the cord nevers, who didn't even think of subscribing to TV distribution, and neither the more stable group of customers which we've gained over the years through bundling and all that, which tend to be the families and the multi-users, which tend to have lower churn for us. But to address this sort of central, cord cutting, people who are starting to think that perhaps they don't need a cable subscription and maybe OTT is enough for them. We believe that Helix is the right product, and actually it's been performing extremely well with more than 300,000, almost 400,000 subscribers in less than a year. To address that need for content in a very simple, in a very unified way that at the end of the day makes them conclude that, you know what, I'll stick to this a little bit longer because I can find really what I want, what I'm looking for, really good. And I have access to, whether it's on an OTT platform, whether it's on the regular waves, wherever, Helix is really a fabulous platform for people to find and consume content. So, and there are others on the broadband side, other initiatives that we've put in place. We have a very high performing network, as you know. And we've been, our customer satisfaction is extremely high. So we've got a number of initiatives in place to combat that general, and global trend that is cord cutting.
Okay. And before I let you go, I wanted to ask a question about one of my favorite Quebec companies. Quebecor was interested in bidding for Cirque du Soleil, and I wanted to hear your views on how the process unfolded there, and how would the acquisition, had it worked, fit in with your strategy?
Well, as we said at the time that we showed an interest in the Cirque du Soleil, our position was simple. It was to say this is a great company. This is one of the most iconic brands from Quebec around the world, which produces very valuable original content, event content. And we said it is a shame that for two reasons. Of course, there was a global crisis, which is still ongoing. And secondly, because of a broken capital structure, it is a company that finds itself in a very difficult situation. Now, since then, a number of things have happened. First of all, the crisis has not subsided, and has continued. And certainly, there's continuing uncertainty as to when these types of events will be able to be held again. And secondly, well, the bondholders, the debt holders of the company took control and are in the midst of finalizing a deal to assume control of the company. And that was the logical outcome to be expected in such a situation and as such a highly leveraged company. And we'll have to see where that leads them, and see where the prospects for the recovery, how they come out, because we're certainly not out of the woods yet. As you know, a number of areas in the U.S. and certainly in Canada are still struggling with the coronavirus. So I think the Cirque du Soleil is a very valuable, a very, very creative company and a huge brand, but that is facing some very difficult times.